what are the 5 best short-term investments? Stick around to find out. Pay off bad debt. Number 2, credit card churning. Peer-to-peer lending. Stocks. Number 5 is short-term bonds. On this channel, we talk about many different investments and what they do for certain people and situations. But today I thought we could talk about the short-term investments that will give you the most profit within a 6-month window. In a few weeks, I'm planning on making a video on the best long-term investments. So anything that can make you money over a year's time. Before we continue, make sure to like and subscribe with all notifications on. Comment down below what you want to see next or an investment that you would like to learn about. Number 1, pay off bad debt. Wait. This isn't an investment. Not exactly, but if you think about it, not paying off any debt could cost you more money than you're making from your investments or side hustles or just your main job. Most credit card debts have up to a 13% interest rate on your money per year. To put that into context, the S&P 500 has an average return of 10% per year on your money. Another thing to remember about your debts is how they keep compounding over time. That $13 on a $100 loan will then become $26 in interest, then $56, and so on and so forth, until it exceeds your original payment. The majority of people's problems are with the loans that they take out. It could be anything from a mortgage, a car payment, or university tuition. What you need to do is to pay back more than the minimum payment, because this will create less of the original payment that your interest will be charged, so it will be much easier to pay off those debts. There are also different places where you can put your money so you don't have to pay any interest, so it's not as much that you have to pay off, and it's much easier to pay off this debt. This will automatically make you more money if you pay off your debts. Number 2, credit card churning. This is where you open up credit cards, spend a bit of money on them so you can make money on the rewards you get. You have to be cautious, because if you don't pay back the minimum on time, then you will either get charged interest or have a lowered credit score, both of which is not good. If you are opening up new credit cards each month to make sure that you get these rewards, make sure to look out for minimum fees. If you don't, then you could be hit with some unexpected charges. Here's what I recommend you do with these cards. Only spend money on things that you're already going to buy. This could be utility bills or food or a mortgage payment or a rent payment or anything that you are going to buy beforehand. This means that you are already paying for what you need while getting around a 30% back on your money. Number 3, peer-to-peer lending. Before I go any further, I want to warn you that this is quite a dangerous investment. Usually when you are giving out money with peer-to-peer lending, it's to people who have already been denied from the banks. This shows you that they are less trustworthy with their money. This is probably the riskiest type of investment on this list for that exact reason. The way peer-to-peer lending works is to give out a certain amount of money to people who apply for a loan, and then they pay it back through interests or monthly fees. There are different types of grades. The higher grades, like A, are the lower risk but the lower profits too. We have the G grade on the other hand, which is much riskier but have much higher profit. Choose your grade wisely. Something else you should do is to make sure that you're investing in many different investments or many different loans. You can invest in many different loans at once, not just one. This gives you a diverse portfolio. You can have a few in the A grade and then have a few in the G grade, and then you can have many in between. Number 4, stocks. Stocks go both ways. They are good for long-term investments because they grow an average of 10%, so if you leave it for a long enough time, then you can make a lot of money through buying and holding. If you want to buy for the short term, on the other hand, you will have to do a lot of research and preparation. You should look at industries and stocks that have shown good short-term results. Make sure they are consistent over the past 12 to 18 months. If you are planning on investing short-term, then it would be much better to invest through an online brokerage to make sure that there are very little minimum fees and you don't have to be going in every time you buy a stock. This will of course give you more money to invest and more time to think about it. Finally, when you invest short-term, you should watch for how much will kill you and how much could help you. This just means that you should manage your money so you can invest properly while being able to pay for your bills. Don't go out buying $5,000 worth of stocks if your expenses are $2,000 and you're making $6,000. Number 5 is short-term bonds. These types of bonds are going to be more dangerous than treasury bonds but safer than short-term stocks. Although they have more danger than treasury bonds, they have a larger hedge to the decrease in value of bonds. This hits long-term bonds much harder than short-term bonds because you're only holding these from 6 months to 2 years. Some things you should do before investing is finding out the right fund. Focus most on the type of fees that are included. If you don't do this, then of course you'll be hit with a nasty surprise. To make sure that you're getting the most out of these investments, you should find out what the tax code is for certain bonds. This makes sure that you're taking advantage of the right tax incentives and you're not hit with one big tax that you weren't expecting. One thing I want to bring up is how your portfolio should be diverse, because if it's in one specific thing, then it's going to be more dangerous. Anyways, that's the video for today. Thank you so much for watching until the end. It's so important to understand all the types of investments, so making these videos are so important. Thanks again for watching until the end. Like and subscribe with all notifications on, and I'll see you in the next video.